Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Bright Smart interim report. Bright Smart Securities and Commodities Group Limited offers a diverse range of financial services in Hong Kong. The company's key business segments include securities broking, providing broking services for traded securities, commodities, and futures broking, offering broking services for commodities and future contracts, bullion trading, trading services for traded bullion contracts, financial services, plus margin financing, plus IPO financing, plus leveraged foreign exchange trading, administrative services, asset management services, media production, producing and broadcasting finance programs. The skyrocketing stock price of Bright Smart Securities and Commodities Group, a year of unprecedented growth in the past year. Bright Smart Securities and Commodities Group, 1,428 HK, has experienced a remarkable surge in its stock price, rising by an astonishing 258.22%. The primary driver behind this significant increase is the acquisition announcement by Ant Group in April 2025. This news sent shares soaring by as much as 60.7% to a record high, with trading halted temporarily due to the anticipation of this major development. The confirmation of the acquisition, procedures progressing as planned in August 2025, further boosted investor confidence, countering reports of potential delays. Additionally, Bright Smart Securities' strong financial performance for the year ending March 31, 2025, contributed significantly to its robust market positioning and investor confidence. The company's revenue increased by HKD 63.5 million, with profit rising by HKD 58.8 million. The acquisition by Ant Group and the impressive financial results have been the primary catalysts for Bright Smart's substantial stock price growth over the past year. These factors have undoubtedly contributed to the company's remarkable success, making it one of the most notable stories in the market. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. Brokerage commission income, particularly in futures and securities broking, interest income from margin financing, robust international demand for stocks via Hong Kong's market, strong support from the mainland, diversified business approach to capitalize on thriving stock markets worldwide. Revenue decline drivers. Decrease in interest income calculated using effective interest rate method, significant decline in dealing income from trading of financial products, decline in futures and commodities brokerage, as well as margin financing. Net income and profit margins decline. A shift in operating expenses. The financial performance of a company has taken a hit with a decline in net income and profit margins. Specifically, the net income decreased, while the profit margins dropped from 69.5% to 65.8%. This downturn can be attributed to several factors related to operating expenses. Increases in staff costs, expected credit losses, advertising and promotion expenses, as well as other charges such as auditors' remuneration, commission expenses, handling and settlement fees, information and communication expenses, and legal and professional fees have all contributed to the decline. These rising costs have put pressure on the company's bottom line, resulting in decreased net income and profit margins. The company's debt level has seen a significant increase from $4,370,000 to $5,585,750. This rise in total debt is also reflected in the bank borrowings, which have increased from HK $4,370 million to HK $5,585.8 million. However, interest expenses have shown mixed results. On one hand, interest expense on bank loans decreased by 52.5% and total finance costs decreased by 44.3%. On the other hand, page 28 suggests that interest expenses may have increased due to higher bank borrowings at a floating rate, contradicting the information on page 14. Overall, while there is some inconsistency in the data regarding interest expenses, it is clear that the company's debt level has increased significantly. The financial performance of various segments and regions within the company has been mixed. On a positive note, futures and commodities broking, Southbound Stock Connect, Hong Kong's equity market, Hang Seng Index's company, HKEX, mainland China investors, and international investors have all performed well, with significant revenue and profit growth. In contrast, securities broking and bullion trading have struggled. Securities broking saw a substantial decline in revenue and profit, while bullion trading experienced a decrease in scale during the period. These underperforming segments will require attention to improve their financial standing. Management is optimistic about the company's outlook, citing the mainland's economic recovery as a key driver of growth. They expect increased southbound capital flows from China to Hong Kong, which will boost trading momentum in Hong Kong stocks for an extended period. To stay competitive, management plans to focus on compliance and cost control while adopting both aggressive and defensive strategies. That concludes the financial summary for Bright Smart. Feel free to comment below, and I will be happy to answer them when possible.